There is no way around it. A good credit score is important. It shows potential lenders that you have a track record of repaying borrowed money as agreed, and that makes you a desirable customer. Hello and welcome to One Score and Moneycontrol presents Score Dekha Kya, and I'm your host Ruchira Sharma. This is a campaign of insightful masterclasses with leading industry experts to decode and debunk myths around credit score, a very crucial number in our lives. And while we all do understand the importance of credit score, did you know that a good credit score can slowly but surely enable us to save our hard earned money? And after all, a penny saved is a penny earned. And that is the topic for today, saving money by improving credit score. And we have with us leading industry experts, Mr. Sarthak Ahuja, a chartered accountant in practice, and he also creates educational content around finance on LinkedIn, Instagram, and YouTube. Welcome, Mr. Sarthak.
Pleasure.
We also have with us Mr. Devang Shah, Chief Risk Officer and Head of Decision Science at OneScore. Welcome, gentlemen, and it's great to have you here with us.
Hi, Ruchira. Hi, Sarthak. Welcome, viewers.
Thank you, Mr. Devang and Mr. Sarthak, for taking our time from your hectic schedules and joining us for this very special masterclass. So, like I mentioned before, credit scores are very important in building the reputation and credit health of an individual. And another interesting dimension, according to experts, is that it can actually build financial health because financial health is built bit by bit through small habits and small savings. So, in this masterclass, we'll be looking at ways that a good credit score actually encourages or builds good financial health. So, I'd like to come to you first, Mr. Sarthak. What are the typical ways that you would suggest to our audience here? How can they really save money while they're looking at building a robust credit score?
So I think wonderful basic question. Now there's a general rule, which we typically advise to people to follow in their lives in terms of personal finance to be able to determine how much should they really be saving and investing. And the rule, very simply put, is 50-30-20, which means not more than 50% of your total monthly in-hand income should go towards meeting your necessities or your absolute must payments for survival. 30% could be reserved for wants, and the remaining 20% is what goes into investments. However, when you do this, it's not really income minus expenses, which is savings. It's actually income minus savings, which should leave you with a bucket of funds for probably meeting your expenses. However, this 50-30-20 rule would possibly apply only to, say, a point of getting an in-hand income for a household of 1 lakh per month. Beyond that, ideally you should try not to increase your need or wants. However,
All
the
right,
amount should ideally go in the investment bucket.
exactly. And also, one should distinguish between their needs and their wants. That's another very basic but very important aspect. All
Absolutely.
right, Mr. Devang, coming to you, if you look at some examples of how a good credit score can actually help us build savings, one, of course, they can get you better interest rates, and better interest rates can impact financial outlays. And also,
Absolutely.
they can give us higher credit limits. So, what are your insights here?
Sure, sir. Before I actually go on the benefits of the good credit score, I'll just take a minute to explain more about the credit score itself. Uh, Credit score, as most of us may know, it's a three-digit score between 300 to 900. Your score more towards the closer to the 900, the better your credibility is, right? And the way this has been derived is, it's a fairly complex mathematical algorithm in the back end, right? Which keeps looking at how your loans has been, credit cards has been, how much payment you have been making, your secured, unsecured products, and many other variables, right, which actually determines your credit score, which in turn determines your credit eligibility as such. But a broad rule, you can say that typically 720 plus is a good credit score, and anything higher than 720, moving more towards 900, is a prime, super prime, or practically a very good credit score as such. Now, what really happens when the credit score is good? There are more lenders who are ready to give you a loan, right? Which means your power to negotiate practically goes up, right? So instead of giving, only one bank giving a loan to you at a lower score, there are probably three lenders who is ready to give a loan to you, right? So your ability to negotiate goes up, which in turn translates into higher loan amount or higher eligibility or a lower interest rate kind of thing. So as a borrower, both these things are pretty important, and that is where I'll say, let's say, the major benefit really comes with a good credit score.
All right. And good credit scores also open access to superior credit products such as credit cards with various benefits. It gives us the power to make larger expenses without taking up additional credit. And people are often tempted to take multiple credit cards. So, what is
Absolutely.
your suggestion here?
So, I mean, a credit card, I will say, let's say, loans is typically, we say that it's a need-based product, right? Whereas credit cards are much more experienced product as such, right? You don't get up in the morning and say that I want to apply for a credit card, right? Typically, credit card is something you may have a specific reason, or there's a, your friend referred to you saying that, okay, this is a good scheme, this is a good card, why don't you go for it, right? Typically, a credit card is much more experience driven product. It's a transactional product, unlike loans as such, right? And hence the basic premise or basic reason why somebody goes for loans or cards is very different. But yes, I mean, coming to your core question, definitely higher credit score ensure that there are multiple options which are available to you, right? More loans, more type of loans, higher eligibility, more different type of credit cards, right? Now even within credit card there are various variants as such, right? So starting from a regular plastic card to a metal card, right? And you get to have an access to everything, right? With a good credit score. That's absolutely a great point.
All right. So, coming back to you, Mr. Sarthak, as I mentioned, one is tempted to open credit accounts that they may not really use. So, what are the common pitfalls in doing that?
I think, one of the factors really taken into consideration by determining someone's credit score is the credit history and the repayment history, and how much of the available credit have they been able to utilize. Now, say, assuming one use case, edge case, where a person has all the money available, their disposable income on a monthly basis is enough to be able to take care of their needs, wants, as well as investments. Some such people would think that maybe having a credit card or any kind of loan on them may not even help, and because it's not needed. However, how does the credit rating agency determine your credibility when you have actually no credit line whatsoever? So for you to be able to build a credit history in your lifetime, so that at any point in the future, maybe 5 years down the line, 7 years down the line, you are really thinking of buying your vacation property, or maybe like a weekend home, or maybe your primary house that you want to be living in, it always helps to have some kind of credit history. And I think a credit card is one way for a person to establish some kind of credit history. For other people who, again, God has been kind and they've been fortunate, they have enough incomes where they don't really need loans, I think another way to build credit history is having an FD backed, you know, overdraft facility available, where they know they've got a fixed deposit against which they can get an overdraft facility, and they'll be only paying interest to the extent that they overdraw from that account. That way they don't really have loans on them, but they're just ensuring that they're building a good credit score because of some history. Now, again, coming to your question about how many credit cards should you have, I think a lot of people really tend to go for credit cards, for the additional benefits that they kind of get, which could possibly be, say, a lounge access or a discount on a particular item that they're eyeing, or some specific club membership. However, I think a bigger question here is, while these perks definitely entice you towards one card, you should just ensure that your utilization ratio on that card should ideally be within 30% of the total credit available to you in that card. Say, for example, you can draw up to 1 lakh per month, and that's your limit. Ideally, you should not spend beyond 30,000 from that credit card to maintain a good score. So as long as you can go by some of these thumb rules which help you maintain a good credit history and have a good credit utilization ratio, I think people then just end up getting cards only for the purpose of maybe accessing certain additional services. Though
Mhm.
an important caveat here is that your credit history or your credit score is also a factor of a balance of having secured as well as unsecured borrowings. And know that credit cards are essentially unsecured borrowings. So if you have a lot of cards and a lot of limits under the unsecured category but none in the secured category, it may
All right.
actually skew your score for the worse as well.
All right. Very pertinent points made by you, Mr. Sarthak. Coming to you, Mr. Devang, does a high credit score also mean that one will qualify for the lowest interest rates and fees for new loans and lines of credit?
Now, from the lender perspective, he'll be more than happy to accept, those kind of customers which are offering a lower risk, giving them a higher revenue opportunity as such. And that is where uh, these lenders will end up giving a lower processing fees or a lower interest rates, giving a clearly a direct savings to the borrower as such. Other thing which I will actually want to add to what Sarthak really said, right? I think secured card, right? Because I mean, in India, still we have a large population who is completely new to credit as such. They do not have a credit history right now. So how do they really build the credit score? And hence, it's important that I mean, let's say you have a one product on the basis of which you are able to build the credit history. Now imagine this is like a chicken and egg, right? You don't have a credit score, and hence this is chicken and egg kind of situation where you don't have a credit line, and hence you don't have a credit score. Nobody is ready to give you further credit card or a loan. How to break this, right? And the best way to break this, what Sarthak said is the right point. Go for a secured credit card kind of product where you have an FD. Against that, you get a credit card, right? Use it and build your credit history. That is something which will actually really help you to take a large value auto loan or large value home loan few years down the line. Last point I will mention is that it is always important to keep checking your credit reports regularly as such, right? Whether you are going for a home loan, whether you are looking at a higher eligibility, or whether you are looking at multiple credit card options, right, meeting different benefits as such. It's very important to be completely aware of what your total borrowing is, right? I mean, let's say having a 10 credit cards, managing them is equally more difficult as such. Yes, you get more benefits, but managing that is also equally difficult. And hence, keep looking at your credit report on a regular basis is something which is key to good credit health, good credit score.
All right. So it's very important, yes, not to get enticed or tempted to take multiple credit cards that you can't really manage. It's better to have two good products instead.
Yeah.
Coming to you, Mr. Sarthak, what is your advice here for our viewers? How does the right strategy with the credit score actually enable one to get better interest and also make better savings over a long period of time?
See, I think when you talk about negotiation in any transaction, when you go out to take a loan, it's essentially you negotiating the terms with the banker or the lender. And primarily, the terms are going to be one related to how much that loan is going to cost you in terms of interest rate, which is something you can really negotiate. So if you've got a credit score of upwards of 750, they'll be happy to offer you the best possible rates. For housing loans, typically banks would say that we want to only lend to people who are upwards of a score of 650. Now, the higher your score is, maybe they don't want to let you go as a customer because they know you're a premium customer. So you could get a discount of say 0.25% on the available rate, or 0.5% in certain special cases, in case the bank has an internal mandate that they cannot reduce the rate of interest on a particular loan below a particular threshold. Then of course they can compensate it by reducing or absolutely waiving off the processing fee or the file charges, which can be a secondary negotiating point. A third negotiating point could be you could ask for a longer term. Some people, even though they don't need a loan for a longer term, just like to have it for a longer term because they don't want more than say 10 to 30% of their in-hand income actually going into uh, you know debt servicing or payment of EMIs for multiple products, which could be a car loan or a housing loan or something else. So it gives you negotiation, being able to stretch that tenure longer, and I think all three are great benefits to have.
All right. So I was actually just going to come to that. Whenever we apply for a home loan or a car loan, the game changer is your credit score, whether we know it or not. And loans with a longer tenure reduce the EMI, they reduce the pressure on us. And, like you mentioned, from our income, from our expenses. So as one goes into different life cycles, how should one really prepare for the future by utilizing credit score?
Sure. So I'll take that question. I think I think the point which you mentioned about utilizing credit score, right? It's a very step by step process as such, right? And it's very much important that we follow that in a very clinical manner as such, right? And the very first thing for that will be to remain to be aware of what your credit score is made up of, right? Right. So let's say looking at your credit report on a regular basis, right? Looking whether all the credit cards and loans which are mentioned in the report, whether they are correct or not, whether that information with regard to the repayment history, right? What Sarthak just mentioned, right? It's checking that on a regular basis and saying that that's accurate, that's complete, is something which is the very first step as such, because this is exactly the information on the basis of which any lender is going to decide for you, right? And hence remaining aware about your credit report, about the content of that report, is a very very prerequisite for a good healthy credit report, a healthy credit bureau score as such. The second step will be, now being aware of that, right? Keep taking an action which is in the benefit of those score as such, right? So very very regular disciplined repayment is a very prerequisite. That's the only way your credit score can improve. For any reasons, if you are not able to pay the complete dues on the credit card, ensure that you are making at least a minimum amount due on that, right? So that you don't get reported on the credit bureaus as overdue customers as such. So being aware, second will be, I'll say, let's say making a regular payments, and then third, finally, being aware of your rights as such. So when you are actually talking to the lenders, right, if you are aware of your situation, right, saying that okay, I have an 820 score, I have an 830 score, your ability to negotiate will be much higher as such, right? So being aware of your right as a consumer, saying that okay, I'm a low risk customer, there are more than 5 people who are ready to lend me, using that right will be the third step in this journey of saving as such.
All right.
I do have
Uh,
something to add there if you do allow.
sure.
Yeah. So,
Right.
speaking in the context of life cycles, they're always looked at in the context of time. And
Mhm.
just to explain how important time is in managing one's credit history, your loans may actually impact your credit rating at any point for whatever has been your history in repayment or default for almost 7 years. So, when you're looking at a 7 year history really impacting what your current credit score is, you have to look at it from a long term perspective, because for you to even impact and improve your score is not as easy as, it's very similar to gymming. You don't build a good physique or a body by going to the gym once or twice a week. You need to do it consistently over a period of time, and only by taking disciplined actions, it may actually take about 18 months or so for your score to actually change. That means if that is the time it requires, anyone who's in their early 20s, who's possibly thinking that by the time they start earning, start a family, and at some point would be thinking of taking a housing loan, it is still a good enough time for them to probably establish some kind of credit history. So from a life cycle perspective, we're really talking about a time where it takes at least 18 months for your scores to start reflecting or improving with good performance.
All right. So, Mr. Devang, let's talk about savings. Mr. Sarthak, actually, you could also go with this first. When we talk about savings, we do talk about using or improving our credit score to actually save money, and this could be done in multiple ways, as all of you mentioned. The fee attached to a credit product, like the processing fee, could be reduced to completely waived off, and this could also lead you to make better savings. So, what are the key strategies that you would suggest for people to actually save more?
One, in terms of negotiation, is, of course, you approach the right banker. Um, I mean, you could negotiate having a good credit score. That's one of the direct effects. Another indirect effect is when you go and approach a lot of bankers to find out, where is it that you're going to get the best rate of interest, and you raise a request with multiple bankers saying, could you tell me what is the best proposal that you've got for my requirement at this point.
Mhm.
All of these bankers that you approach may be actually raising an inquiry on the CIBIL website to fetch your report. And if there are multiple report requirements or inquiries, which are called hard inquiries, which are made against your credit score on the CIBIL website, it actually negatively impacts your score, because there are those many lenders who are wanting to know what is the credit worthiness of this person. So I think the first step, of course, in this saving is also to be, a little knowledge is a dangerous thing. So I think before you start approaching any kind of bankers to find out what is the best deal that they can give you, a credit line is to also educate yourself, go on their websites, read about the kind of products they have. You would be shocked to know certain banks which are assumed to be serving HNI clients
Mhm.
actually give loans for as little as 4% per annum for certain categories of professions and certain line of workers, which is why don't just assume. I think being educated is important, and definitely go to their websites and look at what kind of preferential treatment are they giving which particular sector of society at that point, and if you do fit in that section. Over
All
to
right.
Mr. Sharp.
Thanks, Arthak. I think we spoke quite much about, let's say, savings which can come by way from the loans as such. Let me also touch upon, let's say, the savings which may come from the non-loans related expenses as well.
All right.
For example, let's say many of us may not be aware, but many large companies, right, or large or let's say medium-sized companies now check credit score before appointing somebody on a job, right? It's either a I'll say pre-employment check or many times a background verification check, right, to understand how credit worthy you are, right? From the company perspective, they are going to give you company assets, they are going to give you access to the data and the entire let's say company's IP as such. So they clearly want to look at your credit worthiness as one of the indicator to see whether they can actually part away with their assets to you.
All right.
Same way in a monetary terms, right? If you look at, let's say, furniture rentals or other rental services as such, even the car insurance kind of thing, right? Clearly, you can start making a savings, right? If you belong to a prime or super prime segment as such. Basically, anything which is around, let's say, 720, 730 plus
All
score,
right.
that is where you will start getting the benefits, which may not be directly visible to you, right? The way it is visible in the loan side, but many of these service providers in a backend actually look at your credit scores and then start differentiating, start giving you different prices as such. So that's also one of the good savings, pretty transparent right now. But let's say it's clearly a saving which comes in the consumer's hands.
All right. So, Mr. Devang, you brought up a very important point about maintaining credit worthiness. And according to financial experts, the best bet is to be proactive with your finances. But one is often tempted to make, just the minimum payment when you see your credit card statement. And these, of course, lead to long-term money mistakes. So, what is your insight here and advice to our viewers?
Rajat, the way I've always looked at, and I think the rule which Sarthak really pointed out in the start of the show, it's, I think, a really good thumb rule as such, right? Saying that 50, 30, 20, and depending on the age segment, depending on the income segment, you can keep, modifying this rule. But
Mhm.
broadly, if you have a money, right, it's always better to pay off the debt, right? There is no exception to that, right? Many times, I come across a situation where somebody may say that, okay, I have a 7.5%, 8% home loan. Why should I repay that, right? I mean, whereas fixed deposit rates are just, 5%, 6% kind of thing. The larger point which I will always leave with them and with the audience is that it's always good to pay off the debt because future is always uncertain as such, right? If you have a money, right, let's say either you go for a good set of investment or ensure that you are paying off your debt, which may impact your future credit worthiness, future borrowing capabilities as such, right? Your FOI ratio, and there are many technical things which every lender looks at, right? Needs to keep on improving. The point related to utilization is a very important point in any lender's mind, and hence it's always better to pay whatever you can. The advice is to pay total amount due. Only if you are not able to pay the total amount due, then go for minimum amount due.
All right. Mr. Sarthak, you advise startups. You also give, inputs and educational content for individuals on personal finance. So, what is your suggestion here? How should one really maintain their credit worthiness, even if they have made some past money mistakes?
Right. I think people a lot of times end up thinking very short term and not long term. And when I say that, it's almost very enticing to take on a credit card because you feel you might earn some miles on a particular airline, which will give you a possible upgrade. It'll give you a lounge access. It'll give you access to a club. But no, most of these things are actually also building in a habit or stickiness of really expanding your lifestyle beyond a particular threshold. they're habit forming because those companies are actually taking into account those expenses as customer acquisition cost to make you get used to a particular lifestyle where you could buy from there more in the
Mhm.
future. If that's the case, it may seem really enticing in the short term, but in the long term, it may actually move a lot of your wants into your needs bucket, and then of course inversely impact your savings, which is why when people try to look for you know ways in which they can probably get 0.5% extra return on their investment or 1% extra return on their investment, I think
Mhm.
it's much more simpler to actually reduce your expenses by 5%, curtail on a particular, not saying that you shouldn't go out and spend for yourself, but financial discipline begins with curtailing your expenses rather than finding avenues to make more money. And of course, the best investment that anyone can make is in themselves, because it can really impact their source of direct money making or direct income because of expanded skills. So I think at the core of it, it comes to these first principles really.
All right. So definitely the key takeaways here are that one should make sure that they pay at least the minimum balance, ideally the entire credit rather than the minimum balance, and also make sure that they pay their credit card dues timely. Never miss a cycle. But before we wrap up, according to you, what are the primary perks of a robust credit score, and how are they intricately linked to financial stability in the long term? Because as you mentioned, a lot of us tend to look at a short term horizon rather than a long term. Mr. Sarthak, you could go ahead with this.
Sure, I think perks are enough and many. One, of course, if imagine you're taking a loan worth 1 crore, even 1% per annum is a lakh that you would save per annum on that entire, servicing that loan. Which is why these small percentages, when they add up on big amounts, that's one of the biggest savings that you can really make. And I think a house for most Indians is one of the biggest purchases they make in their lifetime. So that's the most direct impact that I can think of. Mr. Shah, please.
Absolutely, sir. Like I think home loan is, for any Indian today, also home is very, very important, not just a financial but emotional asset as well, right? And we all, stretch ourselves maximum for buying this house as such, right? And hence any savings, right? Though it may sound like a 5%, 10%, 20% savings kind of thing, but on a large scale, right, when you're going to pay that loan for 20 years, it makes a lot of difference as such. Last but not least, I will also touch upon the various non-lending or non-loans related benefits as well, right? Because they are also pretty important in someone's life as such, right? Imagine, if you are disqualified from a job, right, just because you don't have a right credit history, right? That may be possibility as such. Or you may actually be forced to have a conversation with, let's say, in a first week of you joining with an HR saying that why you defaulted on a particular loan, right? Nobody wants to start their career with this kind of episode as such, right? So there may be many tangible and intangible benefits which clearly comes with a good credit score, and there is no other way but to maintain a good financial discipline, to maintain a good repayment discipline. That's the only way to ensure that we have a good credit score.
All right. And as we all mentioned, and we all agree that a penny saved is a penny earned. So going forward, what are your key takeaways or key tips for our viewers to prepare better for the future by actually utilizing credit score and also making small changes in their lifestyle or inculcating small saving habits? Mr. Sarthak, quick tips before we wrap up.
Yeah. So early on, I think when you're in college, or probably immediately after your college, your first job, I think it's important to you to start an SIP investment in equities. But that notwithstanding, also put in a small amount in an FD and get an FD backed credit line, even if you don't use it. I think this one short tip can help you build early credit history, which can pay off in the long term.
All right. Mr. Divan,
Um,
any quick tips?
Sure. Quickly, I will say let's ensuring that all of us are checking the credit scores regularly in a very, very disciplined manner. I think that's the way to go. As an Indian, we are used to looking at the numbers and chasing the numbers as such. I'm sure once we look at saying that, okay, I'm at 720 and I have to reach to 900, will do all the right things to crack that number.
All right. So definitely, just to sum up, a good credit score shows that you're a trustworthy borrower. It is a very crucial number, and it enables us to refinance existing debt, take out a personal loan, and upgrade to better credit card. Of course, get better features. But on the face of it, while credit card scores only display the ability of the borrower to repay, in the long term, they are intricately linked to our financial health. And as our experts mentioned, establishing a good credit score can actually help you save money and make your financial life much easier. So thank you, Mr. Devang, and thank you, Mr. Sarthak, for joining us and sharing your tips. And thank you to our audience for watching.